What if I told you that the biggest threat to the American car market right now isn't EV prices, it isn't Chinese competition, or even interest rates? It's something far more dangerous, far more silent, and it's already exploding behind the scenes. So I'm talking about the car loan crisis, a financial bomb that's about to send shockwaves through dealerships, banks, and millions of everyday car owners. Subprime delinquencies are hitting levels we've never seen before. Repossessions are accelerating so fast that we're on track to hit 3 million repos by the end of the year. And what the banks are publicly admitting? Well, it's only the tip of the iceberg. So just before we take a deep dive, it's imperative you hit that like button and subscribe so that you get notified the minute we produce another game-changing video that affects your future choice of car or SUV. And I promise you'll appreciate it. Now buckle up and let's plunge straight in, because what you're about to hear may completely change the way you buy your next car. And whatever you do, don't click away, because this part explains how the entire auto loan system quietly broke and why the consequences are only now catching up with us. So, to fully understand the explosion happening today, you've got to rewind to 2020. When the world shut down, dealerships panicked, manufacturers panicked, and the entire auto industry desperately needed customers to keep buying cars. So they turned to banks and government lenders and said, hey, we need help. The industry cannot collapse, and the response was historic. Banks began approving auto loans that made absolutely no financial sense. You could walk into a dealership and walk out with a brand new car without making a single payment for 12 months. No proof of income, no real underwriting, nothing. Then stimulus checks hit, and suddenly the demand for cars went absolutely nuclear. People bought everything in sight. Dealerships went dry, used cars shot up in value, and this triggered pure madness. Cars that were selling for 40,000, 60,000, even 100,000 over MSRP. Cybertrucks, Hummers, Toyota's RAV4s, Hyundai Palisades. People were paying luxury home prices for basic transportation. Now, behind the scenes, banks said, no problem, we'll lend you whatever you want, because they weren't the ones keeping the loans. They were bundling them, packaging thousands of risky auto loans into giant portfolios and selling them to private equity, hedge funds, and investment firms. So basically, it was the Big Short, but with cars instead of houses. And just like the housing crisis, it created the perfect storm. By 2022, the problems became absolutely impossible to ignore. Analysts reviewing those portfolios kept seeing the same trend. Loans created after 2020 were defaulting at double or triple the rate of loans from 2017 to 2019. So when experts warned banks about this, banks just ignored it. Why? Because they were making money on volume. The more risky loans they bought, the more they could borrow, the more they could bundle, and the more fees that they collected. Basically, it was a ticking time bomb, and nobody wanted to admit it. Now, don't go anywhere for the moment, because this is the part nobody is talking about, and it affects you directly. So by 2023, the cracks became fractures. Banks saw huge spikes in defaults and repossessions, and they realized the loans they approved from 2020 onwards were built on fantasy. So they did what banks always do when they panic. They tightened lending. So instead of financing 150% loan to value, some banks dropped to 90% loan to value. Instead of allowing 10% down, they demanded 20%. Instead of approving risky borrowers, they basically shut out anyone who wasn't either prime or subprime. Now, they truly thought they were protecting themselves, but they accidentally killed their own loan pipelines. See, by restricting credit, fewer people could buy cars. Fewer sales meant less demand, and less demand meant prices starting falling fast. Suddenly, the 40,000 RAV4 bought at the peak was worth 28,000. The $80,000 truck was worth 52,000. And when the car is worth tens of thousands less than the loan amount, guess what borrowers do? You guessed it, they walk away. And this triggered even more defaults, which triggered more repossessions, which triggered portfolio collapses. But here's the terrifying part. Banks couldn't outrun their bad loans anymore. So kind of think of it as a snowball rolling downhill. In 2021, it was small. In 2022, it was medium. But by 2024, it was the size of a house. And now in 2025, well, banks are sprinting downhill trying to outrun a snowball that they created. But the snowball is moving faster. See, when lenders ask the Fed or private equity for new funding every quarter, they have to show their loan portfolio as collateral. And for the first time in modern history, massive lenders are being told, hey, these auto loans aren't worth what you said they were worth. A $30 million portfolio is suddenly valued at $15 million. Some are even valued at $10 million. Some are toxic enough that nobody wants them at any price whatsoever. And when the collateral collapses, lenders get hit with three terrible options. Get no money, get a smaller amount, or get money but at a punishing interest rate. So rates that used to be 3% suddenly became 8 to 10%. Now that destroys profit margins, so banks lend even less, and that tightens the market even further. So this is why dealerships across the country are quietly saying, we've lost half our lenders. They've stopped lending altogether. Zombie banks, paper banks, portfolios so toxic they're radioactive. And this is why repossessions are skyrocketing into the millions. And this is where it gets personal, so stay with me. Here's what the crisis means for you. Firstly, car prices will drop, but not for everyone. If you've got great credit, banks will still lend to you. If you don't, you may get completely shut out. Secondly, subprime lenders are disappearing. Now, some states have lost 30 to 50% of their subprime lenders. So if your credit score is under 620, well, getting approved may become almost impossible. Thirdly, you can expect bigger down payments for years to come. Banks want protection, so you'll see 15 to 20% down required on many models. Next up, interest rates will stay higher for risky borrowers. Now, even if the Fed cuts rates, banks are pricing in portfolio risk. Subprime APRs of 18% to 29% are going nowhere. Next, more repossessions will happen, I promise you that. And they in turn will affect market prices. So as more car floods auction lots, prices drop even further. Banks lose more money, and of course, the cycle repeats. Next up, a government intervention is becoming more likely. So just like student loans, the auto loan market is too big to fail. If lenders collapse, the US economy feels it. So you may see new regulations, basically limits on how much someone can borrow relative to income, caps on interest rates, or forced transparency on loan bundling. Now, the next 6 to 12 months are going to reshape the entire car buying experience. So before we hit the final section, which includes what you must check before getting your next car loan, just take 1 second and hit like and subscribe. Basically, it tells YouTube that you care about the truth behind the car market. And of course, it helps this channel reach more people who have absolutely no idea that this crisis is happening. So here's what every viewer needs to know right now. Firstly, avoid long-term loans. 84-month loans are financial traps. If values drop, you're buried. Don't chase flashy cars with high payments. A $1,000 monthly payment used to mean a luxury car. Now it means a Tahoe, a pickup, or even a mid-range EV. Check market values every 90 days. If the car that you want is dropping $500 to $1,000 a month in market value, just wait and strengthen your credit fast. Banks are only giving good loans to the best borrowers, and small improvements can save you thousands. Avoid EVs unless the price is absolutely exceptional. See, EVs hold the longest days on lot inventory right now, making future values highly risky. And finally, prepare for turbulence, because the final stage of this auto loan crisis hasn't even begun yet. So in a forthcoming video, I'll show you exactly which car segments are about to collapse in price and which ones will stay strong no matter what happens to the banking system. What you discover there could literally save you thousands on your next car purchase. So stay safe, my fellow car enthusiasts, and I'll see you guys on the next one.